So hi, Bisa. Oh, okay, I will check that later, okay?
Okay.
I'll check it.
Yeah.
Okay, so we're going back to question 14B. So when you're preparing your trade payables control account, on your debit side, whatever you make, whatever payments you make to your suppliers will be recorded on the debit side. Also, when there is a set-off means that your supplier has bought some things from you at the same time as you are buying from your supplier. So you have made some exchange. You are paying back. Maybe you bought something of 400 from your supplier, and your supplier bought something of 200 from you. So instead of you to pay 400, you're going to pay 200 to your supplier, right? That is what we call set-off. So you record it on your debit side. Discount received is also on the credit side.
Discount received is on the credit side.
On the debit side.
The debit side.
Yes. Are you getting it? So on your debit side now, you're going to have purchases, returns, the journal set off, the amount payable to the supplier, which is 14,540, then your discount received, 235. On your credit side, you're going to have the balance brought down, which is balanced at March 2020, 16,250. Your credit purchases, because the purchases journal is trade payables now. So your credit, they already wrote credit purchases, so it's going to be on the credit side. Just take note of that. So it's going to be on the credit side. Your purchases day book journal, the interest charged. Why will an interest be charged? It means you didn't pay earlier to your supplier, so you have been charged a certain amount. Because maybe you're supposed to pay in 30 days, you didn't pay after 30 days, you'll be charged an interest. All right, so it's going to be on the credits, on the credit side. Then the last thing on the credit side there is refund received. You received the refunds. So it's going to be a cash or bank.
Is it going to be what?
Refund received. You won't write refund, you write cash or bank. Is it clear? Is it clear, please? So let me add them together first. We have 615 plus 465 plus 14,540 plus 235 gives 15,855. There's always going to be a difference between the debit side and the credit side. For the trade payables control account, your credit side must be bigger than your credit. Your credit side must be bigger than your debit side. Are you with me?
Yeah.
So for the credit side of our trade payables control account, we have 15,855. So I'll check the credit side now. 16,250 plus 18,230, 230 plus 30 plus 55. Here I have 34,565. So the difference between the credit side and the debit side will be our balance carried down, which will be written on the debit side. So the difference is 34,565 minus 15,855. So our balance carried down will be 18,710. You write it on the debit side.
How much?
18,710. That will be our balance carried down. I will send it to you anyway.
Yeah, okay.
I'll send it to you.
Okay.
Yeah. Shall we move on? All right. We have 14C. All right. Yeah, they said, state 3 reasons why a business will receive a refund from credit supplier. Why will you receive a refund from your supplier? You might have received the refund. Refund means your supplier is paying you back. So if your supplier is paying you back, that's why I told you you have to write cash or bank. Why? the supplier will not be giving you products. Rather, the supplier will be giving you a check or cash. Yes or no?
Yeah.
All right. So what are the reasons why your supplier will be returning, giving you a refund? One, maybe you have returned certain goods. You return some goods to your supplier. That means he has to pay you cash. That's number one. Number two, maybe some goods are faulty. If they are faulty, you have to return it, yes or no? Are you there?
Mm-hmm.
If the goods you bought are faulty.
Just lagged a little bit.
What? Are you having any issues there? Are you with me?
I don't know. It's just glitched a little bit, but I can hear you now. Yeah, I can hear you.
Okay, great. So we're talking about the 3 reasons why a business may receive a refund from credit supplier. The first reason is you've returned, the business has returned goods to the supplier. Then the supplier has to pay cash or check. Number 2, some goods are faulty. If some goods are faulty, you have to return them. And the third one, overpayment. Maybe you overpaid your supplier. You're supposed to pay your supplier 1,500. You paid your supplier 1,700. So he has to return, or she has to return it. Is it clear?
Yes.
Is it clear, please?
Yeah.
Okay, great. I have them written anyway, so you're going to have it. Now we go to question 15. This is a trial balance. So you have the trial balance.
What's the trial balance?
Yeah, it's a trial balance. So what you are supposed to do here is to prepare a trial balance. You have on the debit side and the credit side. So for each transaction, you have to state which one's supposed to be on the debit side, which one's supposed to be on the credit side. Are you with me? So put this in your mind. For a trial balance, when you are preparing a trial balance, your assets and expenses will be on the debit side. Your liabilities and income will be on the credit side.
My expenses and assets on the debit side, and liabilities and income on the credit side.
On the credit side. Drawings on your debit side, capital on your credit side. So what I will do here is this. I'm going to state each one where you are supposed to post them, okay? So what I'm going to do, I'm going to state each one where you're supposed to credit them, and make sure you do them to make sure it balances. When I send you the list, you have to place the numbers and ensure it balances, because your trial balance must balance. Are you with me?
I don't know how to do that.
Don't worry. I'm not going to do the figures for you. I'm going to state which one's supposed to be in the credit side, which one's supposed to be on the debit side. So I'm going to do that for you. So as soon as you receive the image from me, you should try to post them the way you see them. So for example, bank overdraft. Bank overdraft is an expense, it's an income. That means you have taken money from the bank. It's a liability. Bank overdraft is a liability. So it's going to be on the credit side of your trial balance. So I'm going to write bank overdraft credit.
Bank overdraft credit.
So you are going to put 3850 not on the debit side, but on the credit side. So the trial balance you are seeing here, it's wrongly posted. It's not correct. But you are going to use your accountant's idea or expertise to make it correct, to balance the transaction. Because your trial balance must balance. All right. So I'm going to be saying them one by one. For your bank overdraft, it's going to be a credit balance. You're going to post it on the credit side. Your carriage inward on the debit side is an expenses. Carriage outward, both carriage inward and outward are always on the what? On the debit side. Okay?
Carriage outward
both carriage inwards and
side.
outwards are always on the debit side.
Mm-hmm.
Discount allowed on the debit side. Drawings on the debit side. Don't worry, I have them.
Discount allowed on the...
I have them, don't worry.
Mm-hmm.
Drawings on the debit side. Equity is the same as capital. It's going to be on the credit side. General expenses on the debit side. Inventory at May 2019 on the debit side. Irrecoverable debts on the debit side. Property at cost on the debit side. Motor vehicle on the debit side. That's motor vehicle at cost on the debit side. There's provision for depreciation. Mm-hmm. Look at your motor vehicle here. You have the cost of motor vehicle. It's an asset. So it's going to be on the debit side. The way it is here, it is correct.
Mm-hmm.
And provision for depreciation will be on the credit side. It's still there. It's correct. Do you get that?
Mm-hmm. Yeah.
All right. Then we have, what do we have there again? Purchases. Purchases is always on the debit side. Rent received on the credit side, not on the debit. Are you with me?
Yeah.
Return outwards. That is sale or purchases returns. Return outward. What you purchase, you are returning it. So if purchases is on the debit side, purchases returns will be where? The credit side. Do you get it?
No,
I will explain again. There's purchases, right? Purchases is here, 44,310. Purchases is a debit balance.
Mm-hmm.
So returns outward means purchases returns. Returns outward. That means what you purchased from your supplier, you are returning it back to your supplier.
Uh-huh.
So another name for purchases returns is returns outward. So I will write it here for you. Returns outward is the same as purchases returns. Purchases returns. So if purchases is a debit balance, purchases returns will be what? A credit balance. Is it clear?
Mm-hmm.
All right. Revenue. Revenue is the same as sales. Revenue is the same as what?
Sales.
So sales is going to be on the credit side. Purchases is the opposite of sales. Yes or no?
Mm-hmm.
So if purchases is debit, sales will be what? Credit.
Mm-hmm.
So returns inward will be what? A debit balance. Because sales is a credit balance, returns inward will be what? Debit.
Mm-hmm.
All right. Then trade payable.
So it's the opposite of return outwards?
Returns outward is what? Returns outward is a credit balance.
Credit.
Return inward will be what? Debit.
Mm-hmm.
Purchases is a debit, sales will be credit.
Okay.
So trade payables. Your trade payables ledger control account will be credit, then trade receivable will be debit.
Mm-hmm.
Is it clear?
Yes.
All right. So the only thing you're not going to post is suspense. Suspense is not going to be part of your trial balance. Okay?
Why are we not going to post suspense?
Suspense is a separate account. We use suspense when we have errors. So it's a separate account.
So you don't
post it in your trial balance, yes.
Mm-hmm.
So as soon as you post it the way I give it to you here, you will balance your trial balance. It will balance. Mm-hmm. Do you know why you have suspense here? The suspense here is, look at this transaction. This transaction is balanced, yes or no?
Yes.
But there are mistakes here, yes or no?
Yes.
So the difference between the debit side and the credit side is the suspense, which is 17,740. So this trial balance will never balance because there are mistakes there. But it is balanced because there is a suspense there. So you use suspense accounts to correct the errors in your trial balance.
Okay, I get it.
Now, so what you have to do is you need to use the suspense account is 17,740. So that means the total of 17,740 has wrongly been posted either to the debit side or to the credit side. Which you have to do as an accountant. Is it clear?
Yes.
Great. So we go to 15B. It said, evaluate the benefit of preparing a trial balance. We prepare a trial balance to check the arithmetic accuracy of our transaction. But sometimes the trial balance will not detect the errors because your trial balance might still balance with errors. Do you understand? Do you get my point or not?
I get it. I get it.
Okay. So we use the trial balance to check the arithmetic accuracy of our transaction. Clear? Is it clear?
Yes.
All right. We go to question 16A. It said, state 2 reasons why a business maintains a petty cash book. Well, a petty cash book is just for minimum accounts. So why will you maintain a petty cash book? Number one, you can maintain it to provide training for your junior staff. You use the petty cash book to provide training for junior staff. Maybe they just have to go for training. You take it from the petty cash book. And also when you have low valuable payments, like you want to pay $10, you want to pay $5 for some contractors, you want to pay for transportation, you use your petty cash to do that. Is it clear?
Yes.
Is it clear, please?
Yeah, it is.
All right, good. Now, here they said, Juliet maintains a petty cash book with a float of $150. He paid taxi fare, purchased postage stamp. So you see all these transactions are what? They are petty cash. The amounts are not much. So to prepare a petty cash here, we have the debit side and the credit side of your petty cash. So on your debit side, what are you going to post on your debit side? Listen, you pay taxi fare, it's going to be on the credit side. Purchase postage stamp, you purchase postage stamp, it will be on the debit side.
Okay.
Paid employees on the credit side. Purchased envelopes on the debit side. Paid cleaners on the credit side. And that's all. Is it clear?
Yes.
All right, great. Shall we move on? Go to question 16C.
I have just a question. So the stuff we purchased is on the debit side, and the stuff we paid for is on the credit side.
Yeah, yes, yes. Is it clear now? All right. So that's the transaction here. So we'll go to 16C. All right. So they said, state one reason why the balance of the petty cash book at 1 May 2020 may be different from the cash held. Why will the balance of your petty cash book differ from the cash you have at hand? No, listen, the balance of your petty cash book must be equal to the cash you have, except if someone has stolen money, or you did not enter some transaction, or a voucher, a petty voucher is lost. You know, if you are given $100,
so that's why it may not balance.
It may not equal. Yeah, you might be having different. Listen, if you are given $100 to spend, so for the $100 you are spending as a petty cash, as soon as you give money out, you get a receipt. Yes or no?
Yeah.
Okay. So as soon as you give money out, you get a receipt. So at the end of the day, you have a receipt of $50. It means you should have $50 with you.
Mm-hmm.
So if you don't have $50 with you, you have less than $50 with you. That means you don't have $100 anymore. It would have meant that someone has stolen the money, or you did not record some of the receipts, which is a voucher, or one of the voucher is lost. Is it clear?
What is a voucher?
A voucher is just an evidence of payment. Like, it's a payment voucher that I'm giving you this. What? It's just an evidence that you made the payment or you received the payment. So we use voucher for petty cash. We call it payment voucher. Is it clear?
Mm-hmm.
All right. D, they said, state where in the statement of financial position at 1 May 2020, the balance of petty cash book will be shown. It will be shown in your current accounts, in your current assets, sorry. Your statement of financial position has 4 items. We have the current assets, the current liabilities, we have the non-current assets, the non-current liabilities. For the balance of your petty cash book, you record it in your current assets. Is it clear? Is it clear, please? Are you with me?
Yes.
All right. Yeah, I wrote it down already for you. Question 17.
Yeah.
On the next page, yeah. It said, complete the table indicating with a tick which account will be debited and which account will be credited. Trade receivables control account. Trade receivables. When I talk about trade receivables, we're talking about your customers. So it's going to be a credit balance, okay? Hello? Can you hear me? Hello?